In today's video, we will discuss about one more popular fund in large and mid-cap segment, that is Access Growth Opportunities Fund, and check its performance using real data. And by the end of the video, we shall be able to decide whether to continue our investment in this fund or should exit this fund now. Also, in the later part of the video, we will try to see the effect of SEBI's restrictions for fund house for investment in overseas equity. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Access Growth Opportunities Fund has been one of the star performers in its category, that is large and mid-cap category. Here we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 8,000 crores, which is okay for a large and a mid-cap category. While the expense ratio is 0.56% and is on the lower side as compared to the other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is Nifty Large and Mid-Cap 250. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is heavily invested in finance, followed by services, technology and chemicals. Finance and technology being a core sector and services and chemical being an evergreen sector, and quite a good performing large and mid-sized companies form a part of this sector, and when compared to its benchmark, its allocation in all other sectors except the financial sector is quite different. Here I would like to add that the fund has exposure to foreign equity in the tune of around 17% now. Whereas for comparison, we are taking into consideration Indian benchmark only. Whereas ideally, its benchmark should have been a combination of Indian and US index for a fair comparison, but unfortunately, we do not have any such additional benchmark available. As evident, Bajaj Finance, Cholamandalam Investment and Sundaram Finance are the main stocks of the financial sector, whereas Avenue Supermarket and Info Edge are from the service sector. Whereas Tata Elxsi and Coforge are from the technology sector. Here also the stock selection looks good. There are also quite a few stocks from international equity, but the percentage allocation is not that high, and the highest allocation is of just 1.15% to Microsoft, followed by Alphabet and other popular names like Amazon, P&G, Nestle, etc. As per the last fact sheet of the company, there are in total more than 25 international stocks in the portfolio with a very small percentage allocation, which is really confusing. On checking the portfolio allocation, it is evident that the large cap shares form around 60% of the portfolio, whereas mid cap shares form others 37% and only negligible 2% is allocated to small cap stocks. Its allocation is similar to that of its category, and this type of portfolio allocation and strategy is quite beneficial for long-term investors. Mr. Jinesh Gopalani has been managing the fund since October 2018, that is from the inception of the scheme, and that too very efficiently, in the hope that he continues in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's see how the fund performs on risk parameters. Here we compare the parameters with the benchmark index and category average. First, mean return, that is the average return in a year, which is 25.54, which is more than both category average and benchmark. Here, higher the value is better. Second, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 21.28 and is also less than both the benchmark index and category average. Here, lower the value is better. Third, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.04, which is more than both the benchmark index and category average. Here, higher the value is better. Fourth, beta, that is the volatility of the scheme compared to benchmark, which is 0.90, which is less than the category average. Here, lower the value is better. The fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here it is 5.80, which is more than the category average. Here, higher the value is better. Here, on all risk parameters, Access Growth Opportunities Fund perform better than the benchmark index and category average, which is a positive sign for a fund. So now let's compare the trailing, calendar and the rolling returns. On comparing the trailing returns for 3 years, it easily beats the benchmark and category with a good margin. But when compared to 1 year and less, it is not able to beat its benchmark and category. From the table, it is evident that in last 1 year, the fund has been underperforming compared to its benchmark and category. As the fund is less than 5 years old, data of 5 years and more is not available. On checking the calendar returns for last 3 years, that is 2019 to 2021, the fund has been able to beat its benchmark and category, that also with a good margin, which shows the consistency of the fund. But if you see the quarterly returns, it has performed very badly in both the quarters of 2022, and this poor performance is dragging down the overall trailing performance of the fund. Now let's also check the rolling returns for 3 years, 1 year and 6 months. Here also the performance of rolling return is better than the benchmark and has been able to beat the benchmark 100% for 3 years performance. But for 1 year and 6 months, it is 83% and 63% respectively during the returns period, which also indicates that the fund performance has been not good in shorter period, but in longer period, it is able to outperform. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period with the index rose. Here the value is 108, which indicates that the fund outperformed 8% more than the index during the rise period. Here higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index had dropped. Here the value is 93, which indicates that the fund declined 93% as compared to the index during this fall period. Here lower the value is better. The upside ratio is good, but the downside ratio is on a higher side, which indicates that the fund does not have a good downside protection, and it has been generally been observed over long run that funds having higher downside protection ratio are able to generate better returns. As the fund is quite young, it would be quite early to judge its future returns trend from the above ratio. Now let's see the risk return graph. Here on x-axis we have standard deviation, whereas on y-axis we have total returns. It is very evident from the graph that the fund has better total return value with lesser standard deviation as compared to the category average in the index, which indicates that the fund has been able to generate good returns with less volatility than both its category and index. Here on almost all risk parameters, Access Growth Opportunities Fund performs better than the benchmark index and category average, which is a positive sign for the fund. It has been a general perception, and quite a few fellow content creators have been emphasizing that the SEBI restrictions will have drastic effects on the performance of the fund. But as evident in the data, over a period of 6 months, the foreign asset allocation has been reduced by approximately 6%, and this reduction has been due to the underperformance of US market and also increase in the AUM of the fund. I feel that this reduction in foreign equity is in line with the expectations, and hence investor need not worry much, and it is absolutely not necessary to check and review the portfolio every month. Equity mutual fund investments are long-term investments, and checking the fund performance too often is not needed. Ideally, one should review the performance twice in a year or maximum 3 times in a year. As you have watched the video till now, it seems that the topic is of your interest. Hence, I would request you to press the like button and also subscribe to my channel to watch such interesting videos in future. So now coming to the conclusion, what investors should do. First, the existing investors. As always, I would say that last 1 year performance should not be the deciding factor for choosing or exiting a fund. And in my opinion, quite a few factors have played its role for the underperformance of the fund in last 1 year, which includes the underperformance of the US markets, the tarnishing of the image of Access Fund House due to fund running issue, etc. I feel investors should wait for some more time and see how the fund performs and then take any decision. Please share your views regarding the same in the comment box. For new investors, I would like to say that as the fund is relatively young and underperformed in last 1 year, new investors can look at other options from Mirai, Canara Robeco or Kotak Fund House, as they have quite old funds in this category have been performing good. I personally do not have any fund in this large and mid cap category, as I feel that instead of a combined category, I would prefer to invest separately in large caps and mid caps and have my own percentage allocation of my total equity portfolio in this category depending on my risk appetite. In long run, it has been observed that this large and mid cap category has generated returns in the tune of 14 to 16%. Whereas if you look at only large caps, it has given returns of 13 to 15%. Whereas mid caps have given returns of around 16 to 18% and more also. Hence, I personally have avoided this category of funds in my portfolio. Please let me know in the comments about your opinion and reason for selecting this category. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you.